Hi, I'm Bill Blain, Market Strategist here at Shard Capital in London. We're just releasing our outlook for the next 10 years. We're going to focus on 7 major themes and 2 narratives that are likely to dominate markets over the next 10 years. If you want to read the whole report, then you'll find it on shardcapital.com or follow the links below. Let's start talking about market distortion. Now, markets have performed very strongly over the last 10 years. We've seen stock markets almost up 3 times their value from 2009, and global bond markets have performed spectacularly on the back of falling interest rates. But 2 monetary factors have dominated the last 10 years. That's been quantitative easing and ultra-low interest rate policy. As a result, we have a completely distorted market. There certainly has been no inflation in the real economy, but financial assets are distorted and everybody knows it. The real question for the next 10 years is, can the distortion be maintained or will it all break down? And do central banks have any choice but to continue juicing markets through ultra-low interest rates and buyback programs? The effects of this kind of distortion aren't just ultra-inflated stock prices and bond yields that are too low. It also influences the way that businesses behave. When ultra-low interest rates make borrowing very simple and cheap, companies have not been building new factories or creating new jobs. No, instead, they've been using the money to buy back their own stocks or indulge in speculative mergers and acquisitions, none of which have really positive effects on the long-term prospects or the balance sheet for these companies. It's very likely many of them will find themselves over-levered and in trouble should interest rates rise. But what will happen in the next 10 years in terms of this market distortion? There is a great fear amongst central bankers that if they try and normalize by raising rates and stopping support through QE, then markets will take flight and the contagion risk of a collapsing debt market or a collapsing stock market will cause yet another global economic crisis. This is, we reckon, one of the most important narratives for the coming 10 years. Now, another area that is very exciting rather than troubling us is the prospects for the global economy over the next 10 years. The last 10 years have been dominated by unicorns from the tech sector. All these companies that are suddenly worth billions even though they're not making any profits and are suddenly facing increased competition. We've seen the negativity now growing across that sector in terms of failed IPOs for many of these tech unicorns, and also the story of WeWork and its rescue by its owner SoftBank is perhaps the defining lesson of the last 10 years. What do the next 10 years hold, though, in terms of a changing business environment? Well, it is going to be fascinating to see how the 4th Industrial Revolution takes off. And what we're talking about there are the opportunities that will arise from areas like artificial intelligence, robotics, nanotechnology, 3D printing, but also areas like healthcare, longevity, pharmaceuticals, and the bio-industries that are growing. New agribusinesses offer opportunities for feeding people as well. It is going to be a fascinating new industrial age that we enter. But are governments and populations prepared to be able to do that? Do we have the graduates with the engineering and the computing skills and the analytical skills able to control and manage these businesses? These are all going to be factors that become very important over the next decade, and they are also going to be fascinating businesses to finance. It's going to be very interesting to see just how much the global economy changes over the next decade. Another area that we are very concerned about is politics. Over the last few decades, we've seen politics becoming increasingly important in terms of the effect on markets, and that's certainly been true over the last 10 years. In the wake of the financial crisis, we've seen the rise of populism, with populist governments being elected all around the globe. It's even true in the US, where Donald Trump has set a completely new threshold for what presidents can and can't do. And the can't do seems to be very little. It's okay and now accepted that presidents can criticize the once completely independent Federal Reserve, and Trump has not hesitated to do so. Here in the UK, we've seen Brexit and now the election of a populist, centrist, Conservative government under Boris Johnson. But we're also seeing it across Europe in terms of the way that European parties are now falling out with each other over how to address the future needs of the economies. We think that politics will continue to play a leading role in setting market sentiment, and it could get even more interesting. Although everyone in the UK has been focused on the rather imaginatively left-wing manifesto proposed by the Labour Party in the recent UK elections, it's perhaps more likely that we'll see populist right-wing governments arise out of the current dissatisfaction that workers are now feeling with the economies they work in. It's possible that we could see something of a resurgence across the right wing in Europe, and that will lead to all kinds of issues in terms of trying to pull Europe together, but also in terms of immigration. The next 10 years are likely to continue to see politics at the centre, dominating the market agenda. One of the big areas that concerns us for the coming decade is going to be global debt. At the moment, we are seeing very much a shift away from monetary policy towards fiscal policy by governments. That means they're likely to borrow loads more money to finance infrastructure and social infrastructure across economies. It's being talked about in the US, in the UK, and across Europe. But can governments go out and continue to borrow if credibility in the financial system is increasingly strained? It's also very likely that we're going to see the very heavy levels of borrowing done by corporates over the last 10 years and largely spent on buybacks coming to bear its strange fruit, which will be over leverage, makes them more vulnerable in a downturn, which may happen if interest rates have to increase. Many companies will find themselves unable to repay debt, causing a tidal wave of defaults, which could trigger contagion in all kinds of markets. We've also seen the introduction of covenant-light lending to the high-yield sector, which is opening all kinds of opportunities for unscrupulous dealers and traders to game high-yield outcomes in distressed debt markets. But perhaps the most important thing is how personal debt, consumer debt, is changing. We're seeing an increasing irresponsibility and an assumption that it isn't my fault when people go into high debt and find that they can't repay their loans. If that becomes more and more prevalent in coming years, then we're going to see many of the basic assumptions that underlie debt markets tested. We think it's highly likely that the next decade will see some kind of renewed crisis in the debt markets, and if that happens, it will very quickly spread like a contagion to stock markets. Can it be avoided? That would require central banks to continue their low interest rate policies. But is that possible? We increasingly doubt it. Debt is likely to be one of the core risks in the coming decade. One of the areas we're looking very carefully at is the rise in global geopolitical tensions. Now, it's not just in terms of the increasing trade war threats between the US and China, but how we see local areas such as the Middle East, Africa, and Latin America deal with the changing global economy. All kinds of threats and tensions are possible. And that is going to force governments to reassess some of their spending. Defence here in the West has certainly dropped as a component of government spending in recent years. It's one of the things that infuriates Donald Trump most. But even economies such as Germany and even the Danish are now beginning to understand the need to defend themselves. Recently, we saw a surge of Russian submarines into the Atlantic, which NATO was barely able to cope with. It's going to mean increased testing of the West by Russia and China, and can the West respond? It will mean spending even more money. And of course, if you end up with a new Cold War developing and a spending battle to see who moves forward fastest, that's bound to have economic effects. We reckon that geopolitical tensions will become increasingly dominant in markets in the coming decade. Ten years ago, the concept of ESG, environment, social and governance investment parameters, was barely understood. It was a great thing that you invested in well-run companies, and that was always the core of any investment decision. But today, ESG has become one of the major determinants for all fund managers. All fund managers want to know that they are investing in companies that are not going to get them a reputation for funding bad business. That's likely to continue as a theme into the next decade, but it's also going to change into something slightly more rational. Sustainability, which isn't just that a company ticks all the right boxes in the way that it treats people, its environmental concerns, and how well run it is, but that the company has a clear and steady, sustainable future and will be able to generate sustainable long-term profits. That's something that seemed to get lost during the last decade, when the tech unicorns were able to fund themselves yet produce very little in the way of profits. Some companies managed to elevate themselves into leading positions where they are now extremely profitable, but many failed to do so. It's very likely that over the next 10 years we will see a return to fundamental investment, which will include a large element of sustainability. What it means for the markets, though, is going to be very interesting. Where you have areas that don't tick the boxes for sustainability or ESG, which may include areas such as aviation, shipping, oil, gas and mining, it's very likely these companies will find themselves constrained in where they can go for financing. That means the companies have to concentrate even more on making themselves effective and efficient, which makes them more attractive investment opportunities. It is going to be very difficult for many fund managers to not take the opportunity to invest in potentially bad things if they yield more and cost less because of ESG distortions. It's also a big worry that in the next 10 years we may see increasing regulatory capture of the ESG space, with regulators insisting that fund managers do tick box type investments to make sure they meet mandated ESG lists. We are concerned, but ESG will remain at the forefront of investment for the coming decade. It doesn't take a genius to predict that climate change is going to be one of the major themes of the next 10 years. It's very likely that we will start to see serious climate effects in terms of rising sea levels, coastal erosion, but also rogue weather events and rising temperatures. It's going to create resource allocation problems in terms of security of food, and especially water security. These are going to be mini themes in their own right. It's going to create all kinds of opportunities, as I said earlier, for new climate change technologies. It will also create new opportunities in terms of countries that are set to benefit from climate change. For instance, the UK will be one of the few nations that has water security. We also have the ability to farm beef and other proteins very effectively on pasture land at a time when many of the beef growing areas of the world are going to be stressed by higher temperatures. Perhaps that opens up new opportunities for British farming. All these are the kinds of opportunities that climate change will throw up. More importantly, though, is what effect will climate change have on all the other themes that we've mentioned in this outlook for the next decade? How will climate change influence domestic politics, global geopolitical events, but also questions of debt and equity resource allocation? Climate change still has many people who deny it's happening, but the fact that most market people now believe in it means it's going to remain a very significant theme for the next decade.